Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report from here at the Reserve Bank in Wellington, where the Reserve Bank has just released its June quarter monetary policy statement and left the official cash rate on hold at 2.5%, as most economists expected. Some in the markets had expected a cut. They put the chance of around about 15%, but that didn't happen. However, the Reserve Bank came out with quite a dovish outlook for the economy and for interest rates. It says the global economic environment has deteriorated with all the drama in Europe and lower commodity prices. That's lowered the growth outlook and contained the inflation pressures over the next couple of years. The Reserve Bank too has reduced its forecast track for the 90-day bill rate. Now, the 90-day bill rate's not quite the same as the official cash rate, and the Reserve Bank doesn't forecast the official cash rate directly, but that 90-day bill rate is an interesting proxy. And you can see the Reserve Bank has lowered and extended its expectations of low interest rates for quite some time. The Reserve Bank's track suggests that the official cash rate is on hold until June next year. Now that's more than what the economists were saying. They were saying we expect a hike in March next year. And when it's hiked, the Reserve Bank is only seeing, say, 50 to 60 basis points of increases by the end of 2014. So this is all about the Reserve Bank saying interest rates are low and they're going to stay that way for longer because the economy is growing slower and inflation pressures just aren't there. The Reserve Bank also included an interesting discussion about the risks of a meltdown in the Eurozone in its monetary policy statement. And it's clear the Reserve Bank is keeping its powder dry in case there's a real problem there and it needs to cut interest rates. Also, the Reserve Bank Governor has talked about what's happening in the housing market, that the cuts in fixed mortgage rates and the competition for floating rate borrowers has actually improved monetary conditions, i.e. softened them. So the banks have done some of the work for the Reserve Bank. Also, the slight fall in the New Zealand dollar in the last couple of weeks has helped the Reserve Bank out a bit. So perhaps if we hadn't seen the New Zealand dollar fall and the banks hadn't pushed down those market interest rates, we may have seen a cut in the official cash rate. But for now, the Reserve Bank has left it on hold at 2.5%. It's likely to stay that way until the June quarter of next year. And when it does rise, the Reserve Bank is saying it's likely to rise only 50 to 60 basis points. For those people who have floated, that seems like a good outcome for them. For those who have fixed, probably not too much drama, but it does again reinforce this message from the Reserve Bank and from what we've seen around the world that interest rates are low and they're staying lower for longer. I'm Bernard Hickey. That was a special economic weather report from here at the Reserve Bank in Wellington.